Welcome to a new update. Today we are going to discuss the fact that we've got a spot Bitcoin ETF, and the ETF itself has given us a negative return on the asset, which means that since it is live, the price of Bitcoin has been dropping. Today we're trying to explain everything which has been happening, and I'm going to give you some background information on what an ETF actually means for Bitcoin's price action, and also for the perspectives of crypto as a whole asset class, which has seen the biggest day since existence of Bitcoin, next to the halvings that we have seen. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also make sure to comment beneath if you want to see some specific content. Tomorrow we're going to do the altcoin update. Of course, we're going to discuss Ethereum. We're going to discuss more about what we have been discussing since last week. And soon I'll be giving you my outlook on how to build a $1,000 altcoin portfolio. I think this will be posted next week. So make sure to subscribe to this YouTube channel. Also, this video is sponsored by Bybit, which is my go-to exchange where you can get up to $30,000 in deposit bonus. You can find the link in between beneath at my description. Now, time for the Bitcoin ETF, which is approved by the SEC. And it has been approved 3-2, which means that even Gary Gensler has voted for approval. And he wrote a very long letter about the fact that he is not approving Bitcoin, but that he had to approve the ETF based on the Grayscale lawsuit that has been taking place a while ago, which was a lawsuit against the SEC that basically mentioned that the Grayscale wanted to transfer the GBTC fund that they have, which is kind of an ETF, that they want to transfer that towards a Bitcoin spot ETF, and that the SEC is unlawfully preventing them from doing that. So the court actually voted against the SEC, and that opened the doors for the approval of the spot ETF. 10 years after the first ones from Vanek and Gemini has been trying to get there. The Winklevoss brothers has been the first ones. 15 years after Hal Finney has tweeted running Bitcoin, which was during the financial crisis that Bitcoin started to exist. 15 years later, we've got, I would say approval from the big guys that Bitcoin is going to exist and that you cannot kill Bitcoin at all. Now, this is the official file, which basically meant the approval of Amendment 19B4, which is the approval of, as you can see, Rule 19B4, which is the approval of the ETF itself. And the day after, on January 11th, we had the first trading going on multiple exchanges. We also saw a ban of it, as Vanguard was not really looking forward to accepting the Bitcoin ETF. But hey, we cannot have everything in favor of ourselves. It's a hiccup, which is completely fine to have, of course. Now, the Bitcoin ETF has been approved. That is absolutely wonderful. But then we've got the case that the markets have been correcting. Not entirely, because some specific segments of the markets have been doing really well. I'll be touching upon that for a little bit, but what does the ETF approval actually mean to the markets, and what can we expect from here? Those are topics we're going to talk about, but first we're going to talk about the fact that the ETF has a certain impact on the prices of Bitcoin in the short term and also in the long term. So what does this mean? Well, we've got this, which is Walter Bloomberg. He tweeted that the spot Bitcoin ETFs may bring 50 to 100 billion of inflows in 2024, says Standard Chartered Bank. As a result, the price of Bitcoin could rise to 200k by the end of 2025, according to the bank. Now, you might think, hey, what does that mean? Well, even an employee of Bloomberg mentioned that there could be an inflow of 200 billion in the next 2 years for Bitcoin. And then you got the question of what type of impact will that have for the price of Bitcoin. So that means that the simple version is not the fact that if the market cap is 800 billion, you just add 200 billion to it, and then you've got the entire market cap, including the spot Bitcoin. It doesn't work like that. If you are purchasing Bitcoin for $100, it moves the price or the market cap by a 5 to 10 fold. So if I say I'm going to buy Bitcoin by $10,000, I'm moving the market cap by 50 to 100k. The question is, why is that the case? Well, Bitcoin has a certain value at this point. So if you start to buy the Bitcoin at this point, it is because there is a certain small supply available on the markets, which means that it's pushing up the price. Not all Bitcoin is currently available on the markets. So the less that is available, the more of an impact it will have if you start selling or buying. So if Standard Chartered are saying 50 to 100 billion and BlackRock is saying 200 billion, that means that if the ETF is actually the case right now, we will be seeing any of those numbers, that if there is 100 billion of an impact in the markets, you could say that a tenfold of that is going to be added to the market cap. So that means that if 100 billion is the case, 1 trillion is added to the market cap, Bitcoin is getting towards 1.9 trillion or 2 trillion, which means that there is going to be a price increase towards 100k. If there's less supply on the markets, you could even say it's 10 to 15 times the actual inflow. So if it is 15 times, you could say it's 2.5 trillion, which means that Bitcoin is going to be above 100k. If you do the 200 billion math, you will say, okay, it's 2.5 trillion to 3 trillion. You get to do a 4 or 5x, which means 200k. And additionally, people will be buying into Bitcoin, etc., etc. So it will be a big hype, and you can actually say that the impact of the ETF is going to be massive towards the actual markets in itself. So the case that Plan B is saying Bitcoin can go towards 500k plus, this is the dot-com bubble of Bitcoin. It is the case because institutions are here. The total market cap is easily going to go to 10 to 15 trillion, perhaps even more. Maybe we're going to have a longer bull cycle, but at least this market is going to break towards 100k and more, okay? But this gives you some explanation of what the impact actually is. Now, we get into more theory, which means that Quinton, good friend, has tweeted that the net inflow of the ETFs over day one is 625 million. That is absolutely ridiculous because some of those ETFs usually are not even breaking 5 million on day one. And in this case, we've actually seen that there is 625 million of inflow on day one. So that moved the markets by 6 to 10 billion, or maybe more. Which means that you will be saying that if it is 625 million, it's 6 to 12 billion. That moved the prices by like 1 to 2%. And that's what we've seen. We've seen that the markets didn't really make any big move at all. Actually, the markets have been turning around. So we're going to discuss that in a little bit. But the fact that we're having this ETF gives legitimacy to the entire crypto space. This will mean that Bitcoin will be integrated into education, politics. More frameworks will be built from traditional finance, which is probably options trading. It's going to be larger. The markets in itself are going to be moving in a different way. So the bigger this market becomes, the more money will flow into the ETF, the more the case will be that ETFs are going to move the markets instead of Binance, which will make it a more gradual market. Now, it will also impact the crypto markets based on the fact that people who are holding crypto are making money out of this. They rotate the money towards other assets, so the other assets are going to have a bigger move than Bitcoin, as there is so much new money coming into the markets, which gives you the ability to make a ton of money in itself. So that is the case. If we look at the markets, and I would like to look at the entire chart at this point, which is the case that we are having a correction. We're going to talk about that in a little bit. But first, I would like to discuss the gold ETF that was approved and the impact of this, as there are so many confusions at this point based on the fact that the price of Bitcoin is currently going down. That is not bad. That's a very normal price pattern. So what does it mean? Here we saw the upwards run on gold ETF being approved. Here we actually had an approval, price consolidated, and then the real run started to take place. And this was a bull cycle of 8 years. And you could say it is actually a bull cycle until now. But I would say that we went into a bull cycle for 8 years, then a bear market for 4 years. And now we continue to go into a bull cycle again. Actually, from the low, it is a bull cycle since 1999, which is 12 years. So this would mean that we're going to have a continuation of this bull cycle to perhaps 2026, 2027. And that might mean that we're going to continue with the bull cycle of Bitcoin towards that stage too, until shit hits the fan. Now, what I want to show is that the actual impact isn't lying in the short-term price impact on the asset. It is gradual. So it takes a lot of time before you will see the impact taking place, and the impact will be large. Gold had a massive bull run since, and it even went ballistic as it went 4x since the actual approval. Now, why is Bitcoin actually going down since we have been getting the approval? Well, several reasons. For the first argument, you can say that we've been taking liquidity, so that's from a technical perspective. We've been taking liquidity here, which means that we're going to see some downwards momentum from here, as we are so far up after being up from 25k. Very likely statement to make, all right? The second thing is that we have seen high base speculants. If I want to add another one, you can say we've got a massive bearish divergence here, implying that we're rotating towards a downwards momentum for Bitcoin. So most likely we're going to get ourselves into a range. But high base speculants are selling their positions at this point. And also people that have been looking for the ETF in itself don't see a big impact. So high base speculants are selling and the FOMO is out of the market. So the markets are coming back into reality, and after such a big move, the reality kicks in, which means the markets are going to correct. Now, there's also something else which I would like to touch. It's the case that Grayscale GBTC investors are rotating from GBTC towards the actual ETF. So there's risk involved in having GBTC. So Grayscale has to actually sell that position, and they need to rotate it towards an ETF, which means that also the second thing is that people are selling their spot Bitcoin towards the Bitcoin ETF. This means that selling your position from a spot Bitcoin into an ETF requires additional sell pressure, because the people that are actually starting an ETF have already been acquiring the collateral required for the ETF, so that buy pressure is shown in this chart already. The sell pressure is only happening after approval, because there's no reason to sell the position before the approval, as you can just barely hold the position in itself, and there's no reason to rotate your position. However, for the big guys to hold spot Bitcoin, it is giving a lot of risks. Why? Well, liquidity risk, which means that if you hold a big position in Bitcoin, selling spot Bitcoin into the markets is going to give you a lot of slippage and spread and such. So you want to be into a liquid asset, which is an ETF. It's way more liquid than Bitcoin is. And then second, it is fully regulated. So holding spot Bitcoin doesn't give you that requirement, but having an ETF does give you that, which is great for all those big investors. So in the short term, you will see that there's going to be some impact on the markets through the fact that people are rotating, but in the long term it will have a positive effect. That's also the reason why people have been seeing a correction on gold in itself, after which it started to rally up. So it's super big, but short term, and I hope I've explained it in the right way, it has some negative impacts. Now, I'll be showing you from my tweets that there are some regulatory risks, which I've just discussed. I've been giving you a long explanation of what it actually is and how you can define pricing of an ETF and how it can have an impact. So if the ETF in itself is going to rally up, so for instance, I will give you the example of what an ETF will do. So for instance, you've got an ETF, and ETF is priced on a different price than Bitcoin is. So for instance, you have a Bitcoin at $47,000, but an ETF is priced at, let's say, $22. So let's say you launch an ETF worth 100 million. It has 10 million shares, as an ETF has a share. So the price of an ETF is going to be $10. Now, that requires the parties to have a collateral inside their portfolio to make sure that if the shares is going to be redeemed, they can redeem it for Bitcoin. Okay, there are cash settlements, but you get the point. Let's assume the price for one ETF is $10 and it starts with 100 million. Now it rallies towards $15. That means that the ETF itself is going to be worth 150 million, and because it's worth 150 million, it means that the underlying party needs to get more collateral for the ETF to back the 150 million, and that's when the buy pressure starts to kick in. All right, so that is what's going to happen. That's why you need to watch these. That's why also over time prices are going to be moved from the ETF, as the ETF is going to be super valuable instead of an exchange as Binance. Therefore, as all the big institutions are going to be allocating money towards Bitcoin, it is going to have a super big impact towards the markets, and it's going to be one big bull cycle comparable to the dot-com bubble. But I've explained it all here, including the possible impacts that it will be having on the markets, and I'll be showing you what we could be seeing, which is Ether. Ether is currently seeing some serious momentum, and actually it's following the path that we wanted to see. I'm going to discuss this some more tomorrow, but we see the rotation game. Ethereum is also potentially getting a spot Ethereum ETF. The deadline is in May, which means that we're going to have upwards momentum for the coming 6 to 12 weeks on Ether. Easy trade, nothing to do, just take it. All right, it is a commodity. It is going faster due to technology. It has been in the bear market for 2 years, so the sentiment is ultra bad. And additionally, it has a weekly bullish divergence on the ETH Bitcoin chart after taking the liquidity here. So this is definitely one that we are going to watch, but we'll be discussing this at a later point in time. Now, when we talk about Bitcoin, what we should be doing is that basically without any of these concerns, we are technically just having this example. And this example is basically coming from the data that we have in 2016. Long sideways period, it is a bit different than the one in 2016, but you get the point. We probably are going to last into a long range, perhaps have a final breaker of the halving taking place, but I think that's priced in too. For now, we are going to take the liquidity. A very comparable price action to 2016, also very comparable price action to 2020 before we can have the actual bull. Which means that at this point, I think the upside is in. So I think that we're going to have a cycle like this where we're going to consolidate some more, take the liquidity on the long side, and from there we can have a sideways period until at least like perhaps even September, October, before we start to break towards the highs and before we can start getting into a bull cycle in itself. And I think it's going to be a longer cycle based on the fact that it needs more money to move into the market. But given that we are following the path and we're still following the TA rules that we have here, I think this is a very likely scenario. And even if we get lower, that will be great. But I think that having a 30% correction from 49k, bringing towards the lowest 35 to 36, is definitely something that we should be looking out for. Now, how can you trade this? Well, of course, I mentioned this before, which meant take the wide ranges, which means wide range high, wide range low. If we get in this ballpark, you start selling, which if you followed, you've been doing it. If we get in this range, you start buying. Even if we hit anything beneath 41k, this is the period to start buying. But Bitcoin has been rallying from 25k to 50k in a matter of 3 months, which is based on the ETF. So the impact and the influx and the actual momentum has been there. It is at this stage, and now it's ready for a consolidative period to go sideways before we can actually break to the upside and have that bull cycle that we all have been looking for. I hope you have enjoyed this update. I'll be back tomorrow with an altcoin update. Ciao!